Good evening, everybody. It's September the 28th. Today, the Bank of England started quantitative easing in an attempt to save the uncontrollable sell-off and eventual collapse in the debt market. But what does it really mean? And is it going to be enough? Let's talk about it. I'm your wealth guy. Let's talk money. Let's talk market wrap-up. All right, everybody, good evening. Thank you for tuning into the channel. Once again, I really hope you like what we have to say today. But what I would really love is for you to comment down below. I'd like to hear what your thoughts are on the Bank of England, what your thoughts are on the economy, what's going to happen with inflation, and is recession actually out of the way now? But let's talk about today. Because this morning in the pre-market, the markets were set to open in the green anyway, which was a great sign. We needed a little bit of a bounce here. Too many days of negativity in a row. It was due, and that's what we were set to open with. Now, once we discovered the Bank of England was prepared and going to, in fact, begin quantitative easing at a level that is unprecedented. In other words, what they are planning to do is print as much as necessary across the board with no limit in order to save the debt market. Now, for many of you who've been watching me for quite some time on different platforms or even here, you know that I've been talking about that debt market for a while and the implosion of the debt market, which would eventually cause the collapse of the equities market. But let's talk about what this really means. So let me ask you a question. If the Bank of England continues or starts to and then continues to print money without any limits, as much as necessary to stabilize the debt market, what will happen to inflation? You see, the act of printing money is inflationary in itself. So interest rates are going to probably continue to be hiked, even though the act of printing, like I just said, is inflationary. How does this Band-Aid really work? All this is doing is creating a very temporary moment in time of which they're going to see some level of stability in the market. Now, if we look at the 10-year yield today in the U.S., it went down well over 6%, close to 30 basis points, which I'm going to go out on a limb here and say it was probably a record, if not very close to a record. I don't recall ever seeing it drop that much, especially near the close. Sure, maybe intraday trading, but at the close, incredible. Even the US dollar dropped significantly today. But eventually, the US dollar will continue to move to the upside. Eventually, inflation will continue to play a major factor here. Eventually, as much money printing as any central bank is going to start doing, because the odds are other central banks will follow suit here. What we're eventually going to see, and what this is really going to do, is create a significant currency problem. You see, eventually the currencies of the world are going to be absolutely worthless. And we can include Canadian dollar, US dollar, the euro, the pound sterling. It doesn't make a difference. Every currency will eventually fall to its value of zero. And the problem with that is, eventually we need to have a savior of sorts in terms of a currency. So the IMF, the central banks around the world will group together to create or release a digital central bank currency, or a CBDC, a central bank digital currency. Is that the design here? Because we know that by printing money and trying to stabilize the debt market isn't really going to do anything for inflation. We fully have to accept that at this point. Raising rates at the rates that we've been doing is also inflationary. It has not slowed inflation down. Inflation has not been transitory. Interest rates continue to go up. Global economies continue to go towards a recession. Inflation, interest rate, currencies collapsing, US dollar getting out of control, debt markets still out of control. The Fed so far has not indicated one way or the other that they're going to follow suit, which means that they may still continue to raise interest rates. But a pivot in the US is inevitable as well. Because you see, as economies start to fall, the Fed needs to do something, in other words, make a decision. Do we allow inflation to continue to go out of control, or do we allow an economy to collapse? Now, they've already said that we still have plenty of room and expect some pain in the US economy by way of job loss, by way of a slowing economy. But how slow? See, right now there are billionaires out there, and you can actually take a look at Market Watch. I believe it was Market Watch where an article was posted earlier today about one of the most savvy billionaire investors has publicly stated that he anticipates a recession that'll start in 2023 and continue for quite some time. And we don't really know the depth of how bad this recession is. Now, granted, I already said this. I mentioned this in a previous video if you've watched one of the other ones. And that's the truth. We're already in a recession. We don't have to wait till 2023. I mean, if we take a look at the homes numbers today, they were absolutely atrocious. That's 9 consecutive months where the numbers are dropping in the US. Canada doesn't fare much better, let's be quite honest here. But you have an economy that's continuing to collapse. We are in a recession. Job losses continue to increase. In order to make them look better, the expected job losses are increased. So if we come in under that, guess what? Numbers are good. More lies. So what do we do from here? Again, I'm going to reiterate something I mentioned probably a video, maybe 2 or 3 ago. Just the concern here is that you should probably prepare for a worst case scenario when it comes to the economy and the market. That doesn't mean that that'll happen. It just means that it's better to be prepared than to be caught unprepared. Right? Expect the worst, or prepare for the worst, plan for the worst, expect the best. Something like that. I think you know what I'm trying to say. At the end of the day, you need to prepare. And that includes your portfolio, and that includes even things like buying groceries in bulk. Things that you can keep in the freezer for continued inflation. For example, I have beans. I like to purchase a lot of beans, canned chickpeas, things of that nature. There's always rice, things like that. I have been stocking up, especially as prices have increased. Rather than waiting for prices to increase and then purchase at a need, I just purchase them when I find them on sale, keep them stored. Even across the board, for those of you who are into hunting and things of that nature, you can find that ammo also tends to be in a shortage and tends to go up in price as well. So things like that are also important to note. Now, as far as your investments are concerned, I would still prepare here. Now, the markets are probably going to see a little bit more upside because everybody's euphoric right now. Once again, just like we saw in midsummer, we're going to see a little bit of that again. Is it going to last 1, 2, 3 days? I don't know. Is it going to last a few weeks? Possibly, but it's only temporary. It's only temporary. There's only so far we can run from the numbers, and the numbers will continue to be reported, and they will continue to be bad, contrary to what everybody else is saying. Trust that. But that's it, everybody. A little doom and gloom today, but there is some positive. If you haven't sold your portfolio yet, you'll probably see a little bit of a bounce for the next little while. Maybe then might be a time to consider a transition out. Just like we saw the last bounce back in the summer, we're probably going to see something like that again. We usually don't get a double bottom here or a double bounce, but we'll see what happens over the next couple of weeks. I anticipate tomorrow will probably be a little bit on the positive side as well. Not quite with the euphoria of today, but we'll see you tomorrow at the opening bell.